to follow. The Fed has two options: drive interest rates to the floor and flood the system with trillions in dollar liquidity. It's called inflate or die. 2008, the year of financial and economic chaos. We are sinking into recession. We are in recession. The $64,000 question: will it morph into a giant debt liquidation crisis like the 1930s? Only time will tell. The great debt binge of the past 20 years is about to unwind, and the hangover is now. All government economic statistics are lies. Get used to it. If you haven't noticed, pay more attention. Here's an example. Unemployment, not 5%. It's nearing 10 to 12%, and they've got many creative ways of making that mirage seem to be a reality. Inflation is not 3 to 4%. It's between 15 and 17%. MZM is growing at a 16% rate this year, and actually last month was going at a 34% annualized clip. So MZM, whether you're looking at a reconstructed M3, inflation is off the charts. And for them to insult our intelligence and say it's somewhere between 3 and 4%, we've got to wake up. And we already are. We're paying for it at the gas pumps. We're paying for it with our groceries. We're paying for it in every area that is significant to our pocketbooks. GDP is not 4.9%. It's closer to zero. Income growth is a sham. It's virtually non-existent. Robust retail sales, a sham. They're only due to rise in spending or prices on food and energy. There is evidence of the recession, and that evidence is growing. Consumers are nervous and are pulling in their horns. Commercial and industrial bank loans are contracting sharply. The real estate market is in decline and pulling down the economy. Auto sales are down and car loan defaults are up. General Motors lost $38 billion in 2007, the largest losses in automotive history. Unemployment is rising. U.S. banks are forecast to lose 200,000 employees in the next 12 to 18 months. Retail sales declining. Cities and states are in financial trouble due to reduced tax revenues and the credit crunch. So again, when you look at municipal bonds, be aware what you have is not worth what you think it's worth. As a result of revenues in decline, you're going to see the value of your munis take a hit. And that has nothing to do with what we talked about earlier, being overrated to begin with. Paper that didn't deserve AAA rated paper actually being valued at fair market. Federal tax revenues are declining sharply, causing a 25.6% surge in federal deficits in the last quarter of 2007 alone. Debt will kill the U.S. economy in a recession. Total federal government liabilities, including unfunded commitments for future benefit payments such as Social Security and Medicare, are $53 trillion, up from $20 trillion, up an incredible 150% in 8 years since 2000. It took 204 years from George Washington to Ronald Reagan to reach $900 billion in federal debt, and it took only 28 more to go tenfold from $900 billion to $9 trillion in our debt. Toward an inflationary recession or depression, we see a blizzard of currencies being created to fight the recession, not only here in the United States. You can look at our M3 numbers, but if you want to look at M3 numbers from around the globe, it universally is moving at a 10, 12, to as high as 35% rate. And those are not annualized figures. Those are end-of-year figures. The trigger for the German hyperinflation post-World War I were the war reparations imposed on Germany by the victors at Versailles. The triggers for massive hyperinflation in our day could be the credit and default derivative meltdown. Again, a bailout of a financial institution deemed to cause too many ripple effects into the larger economy to let them fail. What will the price tag be, and how much will it cost us? It will cost us our currency.